Alright everyone, welcome back to another episode of Bitcoin, the stock market blues. If you're new to the channel, warm welcome to the channel. In this series, what we do is we check out what's going on in the DXY, also known as the US dollar index. We check out what is going on in the stock market, and we correlate this over to what is likely to happen over in Bitcoin. So let's jump right into today's video. Now, as you can see, the dollar, in the past couple of days, we've been having a super strong bounce. I remember a couple of days ago, coming on for a week ago now, I was telling you, everyone was getting very bullish when the dollar was coming down here, and I was specifically saying, don't count the dollar out until it's done. And we went through previous trends, we looked at the dollar, and what I specifically pointed to was that the dollar has done this before. We go on these big runs, and it looks like, we're about to put in a blow off top. We capitulate, this was a 5.2% correction, and we subsequently pumped about 9%. If we come over to the price action that we've seen since the local top up here, obviously we can't call it the macro top because we're still heading up. We don't know if it's going to be the top of this dollar cycle. But we've only gone down 3.5%, and we're starting to push up very hard. Like I said, do not count the dollar out until it's all said and done. It's come right back down into the bottom of the daily EMA ribbons, which is really not good for the crypto markets. The Bitcoin dominance as well, not specifically exactly anything to do with the stock market, but I would just like to provide a quick update, let you know that on the 4-hourly time frame, the Bitcoin dominance is still, holding major support. So while the dollar going up and the SPY about to head down, which is what we're going to be talking about towards the latter half of this video, the Bitcoin dominance is going up, so still Bitcoin is very likely to massively outperform altcoins. Like I said, dollar, you can argue that we could be putting in something like a bear flag. I mean, I'm seeing something very similar over on the SPY, but the only difference is with the SPY is we've already started capitulating below the lows. And let's see if we can draw something up from this. So depending on how you can draw this, it's very arguable how you'd want to draw this. I'd say I'd draw it something like this. Even as such, it does seem like we are heading up very strongly. I mean, I think the fact that we've come down to your EMA ribbons on the daily time frame is enough for me, at least in my opinion. Let's see what we've got going on here. So if the dollar does keep on moving up, which it does look like it is going to, then in my opinion we should be targeting this 618 fib. I do think it is super likely that the dollar is going to head up to this price. So if you're new to the channel, you might not know why we're looking at the dollar. The dollar is basically inversely correlated to Bitcoin. So the dollar, and it's not always 100% of the time, nothing's really 100% correlated to anything, but the dollar moves up. You can see, we're currently moving up on the dollar for the past couple of days. What has Bitcoin been doing? Well, we've come up, had another failed move, and in the past couple of days specifically, we came up, lower high, came up, lower high, and now we are moving down below support. So it's very evident that the dollar is inversely correlated to Bitcoin. So what we're seeing at this moment in time is really not too good. The dollar has moved up since the candle body close of yesterday, approximately 0.3%, so pretty big move for the dollar. I'm predicting that within the next couple of days or so, this can move up another 0.79%. That might not seem like too much. Bear in mind, that's approximately about 2 times the amount we've moved up today. And you can already see, how much Bitcoin and the crypto market is getting wrecked. So the dollar, like I keep on saying, do not count the dollar out until it's all said and done. We've come right back down into this triple top resistance. We didn't confirm it as we didn't break down and confirm it as resistance. We came down to the bottom of this and confirmed it as support. So, like I said, this is, a multi-year triple top pattern playing out since 2016. 6 years worth of data traded. This big red box that we've got playing out on the charts right now is 6 years worth of a potential triple top pattern that could be playing out. And bear in mind, we've come down to backtest it. So heading up, really not a good sign. Let's head over to the SPY now. I see some people have drawn this as a rising wedge. I was talking about this being a bear flag. If you don't want to consider this to be a bear flag, you can always consider this to be a rising, broadening wedge, if I do say so. But, as you can see here, you can also draw this out to be a very convincing bear flag. If you get rid of this channel, then, you know, you'll be able to see very, very textbook bear flag going on right now. Why are we checking out the SPY? Well, the SPY basically is a leading indicator of what happens in Bitcoin. You can see, you know, 27th of May, the SPY started to head up. Check out what happened to Bitcoin. The 30th of May, this is when Bitcoin came up. So the SPY led the rally. It broke down and pumped up on the 2nd of June. When did Bitcoin pump? It pumped on the 6th of June. So once again, the stock market led the rally. And at this moment in time, the stock market is breaking down, much more bearish in my opinion than we are seeing over in the crypto markets. Bear in mind, it is all relative, meaning that, you know, the SPY may still be up a tiny bit, but the price action that we're seeing in the short term, it's not good. How Bitcoin moves is a lot more amplified than what happens in the SPY. So, you know, you can expect a 1 or 2% drop over on the SPY to correlate to an absolute slaughter fest over in the Bitcoin price. And this is kind of hard to justify this being an M pattern. It would be a perfect M pattern, but we've got many gaps in the price chart. Nonetheless, if you don't want to consider it an M pattern, which, you know, I still would consider this, we're almost about to break down from the neckline. We do have an undeniable macro, slightly more macro M pattern playing out. I should probably say midterm because I'm on the 4 hour. Nonetheless, we're really not looking good. We have broken out to the downside of this, and, you know, hold your horses. I would be waiting for a daily close below 4010, a daily close, or approximately 409.6. Let's round it down a little bit to be conservative. 409.6. If you see the SPY start to move below, then it's really not going to look good for Bitcoin. And like I said, the SPY is a leading indicator of what to expect happening over in Bitcoin. So I really don't see at this moment in time that the SPY would be breaking down while Bitcoin is going up. If we look at a couple of other tech stocks, some of them are about to open their pre-market bearish. For example, we've got Google down here about to open its pre-market down at 2309. If we come over to the SPY pre-market, wow, pre-market is actually down here at 408. And if we come over to the 4-hourly time frame, come down, we're basically sitting on the pre-market right now, to be honest. SPY is at 211, expected to come down to 28. This is pretty much going to put us towards the bottom half of this bear flag, which is really not a good sign, especially on the 4-hourly time frame. We're already starting to segue below it. If we move over onto Tesla, you can see pre-market going to be opening down from 715 all the way down to 701. This is going to put us below the 13 EMA. This is basically going to confirm this is a rejection. And as you can see now, the markets are starting to open. So a lot of these are literally opening their pre-market bearish. That does not mean, you know, we can't move up. It is just a worrying signal because all of these are already breaking down already. Tesla's already had a macro breakdown and we've got rejected from the EMA ribbons. Facebook has been super bearish for so long right now. We're kind of just chopping to the side, not too much to say here. Over on Coinbase pre-market looked like it opened lower as well, below the 13 EMA, which is not a good sign, especially considering we've recently got rejected from the EMA ribbons. You'd really want to start to see continuation. Once again, already covered the dollar. The dollar looks exceptional. Sensational. 4-hourly time frame, you can see it's opened, and it is, you know, I really don't want to say it's moving up because it has just opened. So I'm going to chill before I make any statements like that. We'll see how it plays out later when I make my videos tonight. Looking at Airbnb opening bearish as well, rejection from the EMA ribbons on the daily, not a good sign. Apple looking moderately okay, still holding the 13 EMA, but there is a lot of weakness in these markets. Netflix has just been chopping sideways. I mean, I don't really expect much from Netflix at this moment in time. It's down about 74%. Tons of selling volume came in. I imagine that most of the people that wanted to sell this have probably exited right now. Does that mean it can't go down lower? Absolutely not. I am still expecting these tech stocks to go lower with the markets, but I wouldn't expect much movement over on Netflix at this moment in time. Looking at Microsoft is also opening bearish, below the EMA ribbons on the daily time frame as well, still on the 13 EMA. So a lot of these are very shaky right now. And to wrap up the video, I keep on saying this, I've been saying this for the past couple of weeks, but do not count the dollar out until it capitulates and starts closing daily, weekly candle body closes below this big resistance area. Now I'm gonna have to move this red box down if I can actually grasp it somewhere. Here we go. So we are now going to move down this is basically support. So, you know, at the bottom down here, I would mark this as green, but at the top, this is red. So I'm just going to keep this red as it is, because at this moment in time, we still don't know whether we are going to get macro rejected from here. Like I said, if we do break down, which we've already done, if we come up to the 618 at 103.5, 103.6 approximately, then it's probably not going to look too good in the short term for cryptos. But if we do get rejected from 103.6 on the dollar, then, you know, so be it. So at this moment in time, I keep on emphasizing this, but I'm very much sitting on the sideline. The stock market looks very, very shaky. I am expecting us to dump into the next FOMC meeting, or rather, I'm expecting us maybe to trend sideways, pump into the FOMC, and then specifically on the 15th and the 16th, I believe the Fed is once again going to increase the basis points, or rather the interest rates by 50 basis points. That's a 0.5% increase, and I do once again believe that the markets will react very, very poorly to that. Once again as well, Bitcoin dominance, we've had a throw out of this pattern and we've broken back into it. We are still kind of chopping around. I hope we do start to gain some momentum and push back up for the dominance, because I really don't want to see this being a failed move. But at this moment in time, like I said, for the Bitcoin dominance to break down, you really need to start seeing some bullish market sentiment and altcoins outperforming Bitcoin. And at this moment in time, I really just don't see that happening, especially if the dollar keeps on moving up. That's basically all I've got for the stock market blues. Once again, if you're new to the channel, welcome to the channel. Hope you all enjoyed the content. As always, Cowboy out. Peace.